How's it going, everybody? It's Stas here, and in today's video, we're going to be talking about and breaking down the top couple of stocks, actually the top 10 stocks that I'm watching and that I'm looking to trade right now in the middle of this crazy stock market crash that we're experiencing. And I also want to go over a market update just to break down what the S&P did today, the Dow Jones, and the Nasdaq, and in general, what I'm personally doing in terms of my trading, and a bunch of thoughts going through my head during this crazy time that we're experiencing out there, not only in the stock market, but in the economy and in the world in general. So all I ask from you guys is, if you enjoyed this video, as always, hit that like button for me and consider subscribing to the channel if you want to see further content like this. And also consider it joining our Discord group chat and our Facebook group. Those are linked down below in the description box and are 100% free of charge. So before we do get into these 10 stocks, let's do a quick rundown of what the markets did today, the pattern that I'm personally seeing, and kind of what we can expect over these next couple of sessions. Actually, let's not go that far, because it's been very difficult to predict a couple minutes in the future, let alone a couple weeks. So let's predict maybe what could happen in tomorrow's session. That is something that I do feel decently comfortable doing here, and we'll take a stab at it. So the S&P 500 today up $11, guys, and it's refreshing to see us have a normal day for once. You know, these past couple of weeks, as many of you all know, that we've been crashing to the floor here in the markets. We've been having 5% green days, 8% red days. We had a day we were down 12%. So the fact that we're up only 0.5%, again, it's refreshing. The market had a normal day today. Right? And in terms of this 1 hour chart, this 1 hour, 20-day chart that we're seeing here, today's action, especially towards the end of the day, you know, it's kind of showing resistance. You guys can see it for yourselves. We're seeing a pretty strong resistance here on the S&P 500 at around 2450. You guys can see it. We topped there at about noon Eastern Standard Time today, again at about 2 p.m. Eastern Standard, again at almost 3 o'clock, and then towards the end of the market, with about 15 minutes left, we double topped there yet again before dumping a pretty decent amount, roughly almost 2%, in the last 10 minutes of trading. So we're seeing a bit of a head and shoulder there on the daily chart for the S&P heading into the close. And again, that resistance across the whole day pretty much. And honestly, this is pretty bearish in my opinion. This is pretty bearish. And again, back to that 20-day chart, the fact that we are seeing that resistance today, you know, on the daily chart, we can see it equates to the 50 SMA being yet again a strong resistance here on the hourly chart. So for me, technically speaking here, basic technicals, this thing is still downtrending, and honestly, I could see it fall even further down tomorrow. And we can see here, oh wow, are the futures down right now? The futures are down. Actually, no, the futures are closed right now, but we're seeing they're down 46 points. So did we fall after hours? Yes, we did. It seems like we did fall after hours here up until right now in terms of the E-mini S&P future. So there you go, guys. The S&P saw a head and shoulder heading into the close. We dumped a bit there. Now we're seeing the futures down even further. So I guess it's safe to say that tomorrow, if everything remains the same, that is, we may be going down even further, right? And judging the let's go to the next main index here, guys. Judging the Dow Jones up 188 points at the close today, up 0.95%. Again, pretty normal day, really refreshing to see it. You know, we're seeing the same thing as the S&P on this daily chart. Pretty strong resistance at around 20,300 for the Dow Jones multiple times today. On the intraday chart, you can see it. We got rejected there, and like the S&P, pretty nice dump off there towards the end of the market. And the Dow Jones futures, they're currently down 253 points here after market hours. So on the hourly chart, expect a dump off tomorrow, guys. That's, again, if these futures maintain their red status heading into the morning, and that's if we see large caps red in the morning as well. And don't let this fool you guys, because I think last night, I went to the bathroom, in the middle of the night. Sometimes I pull up my phone, go on the futures just to see what they're looking like. And the futures, they were actually deep in the red last night. I forget what point it was, but they were deep in the red last night. And then all of a sudden, the market turned green today, right? So don't always just assume that if the futures are red, they're going to stay red, because it can turn on you in the snap of a finger, and really take it with a grain of salt, guys. But overall, now at this time, the futures are red, and I'm going to be monitoring them very heavily throughout the night. I'm going to probably set an alarm every hour to see what the futures are at. No, I'm just kidding, guys. No, I'm not going to do that, but we're going to monitor them in the morning to see what everything is looking like. So the NDX, Nasdaq today up 1.58%, up $113 on the day today. And in terms of the hourly chart, we can see that the downtrend is still intact. And on this daily chart, we can see the massive dump off that we saw in the last hour of trading, actually more like the last 30 minutes of trading. The Nasdaq went down 2.15%, and after hours here, they're not down a lot, but down about 0.29% in terms of the Nasdaq futures here. And again, like the S&P Dow Jones, I expect this to dump if everything maintains the way that it's looking right now in terms of these red futures and so forth, guys. So overall, that's what the markets are looking like today. Probably the most uneventful day that we've seen in recent history. And again, I'm happy about that. I'm very happy about that. It was a refreshing day, and I hope we get to see some more calmness out there, but again, I doubt it. Don't let this little day fool you, because the volatility, I personally think, is not going anywhere, at least in the short term, and I wouldn't be surprised if we did get whiplashed down another 5% tomorrow. That would not surprise me whatsoever, and I would love to know what you guys have to think about that down below in the comment section. Now, normally, we would be talking about what I personally did in the markets today, but the truth is, I didn't trade today, guys. I did not trade today, and I talk about on the channel a lot that sometimes the best trade to make is no trade at all. It's okay not to trade one day. You don't have to trade every single day. Sometimes cash, literally cash in your brokerage, it's a position, and sometimes just keeping cash and not doing anything that day is the best thing you can do. And for me, the markets weren't that volatile today. I didn't really see any intraday opportunities. I'm sure I could have caught something, but truth is, I wasn't looking hard enough. That's not an excuse. I'm just saying, didn't really see anything from my personal watch list. So I figured I'm not looking to go long quite yet. I'm not looking to force anything. So I'm not going to trade, and that is why I did not trade today. And I really challenge you to do similar things, right? I challenge you to analyze every single trade that you're about to take, and if you analyze it and you're telling yourself everything is in line, all your whatever steps that you need to see before taking a trade, everything is perfect, take the trade, right? But if you're forcing any aspect of that trade, sit back, ask yourself, am I forcing this? Is it better for me to just stay in cash? And then maybe you won't take the position at all. And what this has helped me do, honestly, guys, is, it's helped me analyze my different trades and really, how do I put this in simple terms? It's really allowed me to see and organize the bad trades from the good ones when I'm being very picky like that. And again, I challenge you guys to be that picky when it comes to your trading, and you'll figure out that, sometimes over trading is to your own detriment, right? That becomes very, very detrimental to your own trading. So now that I got that little side tangent out of the way that I did not trade today, let's get into these top 10 stocks. And honestly, guys, there's about 20, 25 stocks that I'm watching, probably 30, maybe even closer to 50, honestly. But for the purpose of this video and for the purpose of keeping it in the 20, 30 minute range, we're only going to talk about 10. So let me pull up my notes and let's get busy, guys. So Netflix is this first stock that I'm watching here. And out of all of the stocks in my watch list, I don't know if this is the least affected, but it's for sure one of the least affected stocks from this whole CV outbreak, this craziness that's been going on, right? And it's Netflix. Again, ticker symbol NFLX. This stock, guys, it was $393 about 2-3 weeks ago. Now it's trading at about $332, which, if you guys take a look, from $390 down to where we are now, that's a drop of only 13%, 13 to 14%. And that's quite impressive, guys. And the way that we're seeing a nice, strong support here for Netflix at about 320, we're popping up to 330 now. We're struggling a bit at the 340 resistance, but nonetheless, we are seeing some positive push to the upside. That's a good sign for me, honestly, when we're talking technically speaking now. But again, guys, if the markets do take another leg down, a big downturn, if things get volatile again, which I said 2 minutes ago, I fully expect them to do, this stock will probably see another leg down, maybe to 300, maybe to 310, but that's even better, honestly, because if we're looking to pick up some Netflix, I would like to get it, honestly, in the 200s, in the 250s, in the 275s, even in the 300s, low 300s, that is. I would be interested in picking up some Netflix because arguably their revenues are not too affected. If anything, more people are buying into the Netflix service. I know I have been watching more Netflix in this time period, this past week and a half, than I ever have in my life. And that's funny because truth is, I'm not that big into watching shows and streaming. I used to be about like 5-6 years ago when I was in college. I used to stream, watch more shows and movies, but recently, guys, these past couple of years, I haven't really been too into it until now. And again, that's probably the same with a bunch of people that are quarantining in their homes right now. They're working from home. They may have a bit more free time on their hands. Like me, again, and like many of you guys out there, these people might be buying Netflix, adding the membership, and thus their revenues could be actually increasing. So for Netflix, I'm very interested in seeing what their numbers are in these next couple of quarters. And I could see this stock being an outperformer when it comes to the overall market. Sure, it might still be red. The stock might still have a negative return, but you have to realize compared to the S&P's negative return, Netflix will probably do much better. Let's just put it that way, and it's already doing better, again, being down 13%, while the S&P is down about, 30%. So Netflix is already doing better. Another business that I'm looking at is Shopify, ticker symbol SHOP, and this is not doing better than the S&P, guys. This is not one of those companies, or rather Netflix. Let me see if it's doing worse than the S&P. It is. It's about 40% in the red from its peak. S&P down about 30%, but that doesn't mean I'm not looking at it, right? I'm still looking at Shopify in general, due to the kind of business model that it is. People creating e-commerce stores, thus selling products, and obviously people buying those products, and that's how Shopify makes money. One thing that might be iffy in terms of this is if any supply chains were disrupted in, the manufacturing of whatever products that are being sold on the website. Sure, I'm sure many businesses from Shopify that use Shopify are having trouble manufacturing and with their supply chain and stuff like that, which is why we're seeing Shopify down pretty big, right? But in general, I'm thinking that people are still going to be creating these Shopify stores. Heck, I even have a Shopify store linked down below in the description box where I have my merch. This thing is still running, and if people buy anything, that's Shopify at the end of the day still making money, a little cut, whatever commission they do end up making. So in the future, in these next couple of weeks, months, I'm interested in seeing, what type of revenues Shopify is going to be doing. And honestly, anything in the 200 range, 250, 300, especially low 200s, that's an interesting opportunity and maybe a buy point for Shopify. And again, at any point in this video, don't take this advice and just blindly buy stocks. Do your research. As always, do your own due diligence so you know what you're getting involved with for yourself. This is your hard-earned money. This is not my money that you're going and investing in. This is your money. So do your research as always. The next stock I want to go over is Microsoft, ticker symbol MSFT. And a lot of tech names have been holding up pretty well as well. Microsoft is down only 20% from its peak at $191 per share, down to where it is right now at about $140 per share. And this is arguably because many of these big tech names, Netflix, not as much as Netflix, but a lot of these big tech names like Google, Amazon, Apple, and Microsoft, they have pretty amazing balance sheets at the end of the day. They have a lot of cash. I'm talking billions of dollars in cash. I don't know about Netflix. Have to double check in terms of their balance sheet, but I know for a fact it's not nearly as good as Microsoft, Apple, and the ones I just mentioned, right? And having this cash is honestly good, because if we do end up going into a recession, I saw some tweet about, JP Morgan came out and said GDP for Q1 was going to be negative 4% and Q2 was going to be negative 14%, which is insane. If that comes into fruition, guys, which again, it most likely will due to this whole CV outbreak, we're going to need to be investing in companies. I think it's wise to have money in stocks, if you're in the stock market, that is, which if you're watching this video, I'm assuming you are. I think it's wise to be in companies that have cash to weather the storms and that have been through previous recessions in the past, and they've made it through previous recessions in the past. And that's Microsoft for you, right? They have a lot of cash. And some of these other companies that we're going to be talking about are in the same boat, right? The next one, Johnson & Johnson, has a lot of, experience getting through previous recessions. They've actually increased their dividends through recessions. They're known as a dividend king, meaning they've increased their dividend, not for 25 years, guys. No, not 25 years. But 50 years. Yes, you heard me right, 50 years. And when it comes to J&J, their stock is not down as bad. It's down 17% from 154 down to 127 where it is right now. And it goes to show because they have a quality balance sheet. This is more of a quality company. And that's what you notice, guys. You're seeing the Ubers of the world. Not saying that they're crappy companies, but you're seeing the Ubers of the world in times like this get slaughtered because they don't have healthy balance sheets. You're seeing the MJ stocks get absolutely slaughtered. You're seeing these cruise line stocks get slaughtered. These airline stocks get slaughtered. But the value companies, the safer quote-unquote companies, the J&Js, the Microsofts, right? They're holding up pretty well right now compared to the market, and these are the stocks that, again, I'm looking to focus on right here. I think it's wise to focus on these and not try and, rush into unprofitable companies that, who knows, they might not be around in a year from now, right? Not saying Uber's not going to be around. Don't twist my words, but you guys know what I mean at the end of the day, right? So Apple's another one. No need to go into depth in terms of Apple, but cash cow. They have a lot of cash, billions on the balance sheet, although they are affected a bit more than Microsoft and J&J in terms of their price drop. They're down about 25%, and that's mostly because I would say their exposure to China. They have a lot more exposure to China than the average company out there. And of course, we know what's going on over there. So we're seeing this massive drop in Apple. But either way, this stock, I'm not looking to buy it at 240, but if it gets lower into the 100s again, somehow, right, if we get to 200, 190, 180, 170, if it does get down there, which would be crazy, I would probably start buying into some Apple. And another company here is going to be Coca-Cola, ticker symbol KO. We're finally getting back to some interesting levels now in Coca-Cola. This stock arguably was one of the more overvalued stocks. Yes, overvalued. Their PE back when it was $60 per share was, I don't even know, I think it was like 25 to 30. And for a company that's barely growing, being priced at a premium of 25 to 30 times earnings, which a lot of these growth stocks have that valuation, it's insane, right? KO, Coca-Cola, they're not growing. They should not be at a 30 PE. So now that it's fallen from $60 down to $40, that has brought the valuation down a lot more. And honestly, I think that this one came crashing to the floor quicker than some like J&J or Microsoft because it was more overvalued than J&J and Microsoft. That's why it saw this massive crash of 30% because, again, if we're looking at J&J at 150, I'd rather buy J&J at 150 than Coke at 60, right? That's just me at least. So Coca-Cola, balance sheet, pretty solid. Been through previous recessions, now at $40 per share. If we get down to the 30s, 30, 35, I would for sure consider buying up some Coca-Cola here, ticker symbol KO for that juicy dividend. I forget what it is right now, but it's probably in the 3-ish% range. If I had to guess, 3 to 3.5%. So another one, talk about this one a lot, but figured throw it in this video. MasterCard, ticker symbol MA. This is one that I nibbled some shares a couple weeks ago at about $290, and honestly, I'm looking to buy pretty heavy here in the low 200s, and if we get into the high 100s, I'm looking to buy there even heavier. And overall, when we're looking at the payment providing service industry, it's kind of a duopoly between MasterCard and Visa. And I talked about this yesterday. Don't want to repeat myself too much on the channel, but I think it's wise to own. You can own both. You can own either one, but having exposure is a wise thing, right? So for me, MasterCard, I favor it a little bit more because it grows a little bit quicker than Visa and it has more growth potential in the next 5 years, but that does not mean I don't like Visa. Again, both are very, very quality companies that honestly, I could see them fit in any person's portfolio that has a 5-10 year outlook, because I can almost guarantee, nothing is guaranteed, but I can almost guarantee that more people are going to be using these payment providers in 5 to 10 years from now than they are right now. And that's one of the main theories that I have in terms of investing in this company, right? So Tesla is the next one. Tesla today had a pretty monstrous day, up 20%, up $65 per share. And for me, guys, I'm not looking to buy more of Tesla at least until we get into the low 300s. Low 300s, maybe I'll buy more, but 200s, 250s, if we somehow get back here, I will for sure be loading the boat on some Tesla shares. Again, I've mentioned on this channel before, I am in Tesla. I've been buying couple shares. Not recently, guys, not recently. Before, when it was like 200, 300 range, that's when I was buying and rode it all the way up to nearly $1,000. And now I'm riding it back down, looking to, again, pick up some shares down there. And when it comes to some quote-unquote more safe stocks, although, again, guys, no stock is truly 100% safe, utilities. I'm looking at utilities. Some of these regulated names have come down a pretty good amount. Duke, I own this one. It has come down from $103 per share, which, kind of like Coca-Cola, that was very overvalued in my eyes. It came down from there down to about $74, which is a haircut of nearly 30%. So at this point, Duke, again, regulated utility, one of the safer areas to invest in, I'd say. I think it's worth considering some here in the low 70s for that juicy dividend yield and more of a safer, more stable cash flow type of play. And some other utility names, Dominion. I forget the ticker on that one. Look it up, though. Dominion, that's definitely one worth watching. Southern, ticker symbol SO. This is one that's taken quite the haircut as well. Another good company out there. These are just some that I'm personally watching. And I kind of alluded to the airline sector earlier. I'm also watching airline stocks, guys. I'm being very, very cautious. I have not put any money in airlines quite yet. And the truth is, I don't even remember I don't think I've ever owned an airline stock in my life. Maybe I've traded them before, I can't remember, but investing in one, I've never owned one. So the ones I'm watching, and guys, you have to realize the government is going to bail these companies out, right? The government is going to bail these out. As the CV is taking its course, travel stocks, airline stocks, they're getting slaughtered. The government, kind of like it did back in 2008 with the bank stocks, the government's going to step in here and bail out the airline stocks. Same thing with Boeing, guys, ticker symbol BA, right? Just take a look at the onslaught that's been occurring. DAL, Delta, if I were to buy anyone, this was probably it. Delta down 9% today, down $2 per share. LUV, Love, Southwest Airlines, down 12.2% today. This is another one that if I had to buy, I'd probably pick LUV. And when it comes to some other ones, Discount Airlines, Save, Spirit, I was looking at this one, guys, at, in the 20s a couple weeks ago. I was looking at these thinking, how far can it go down? And now fast forward, we're almost in the, mid-single digits, which is insane. We hit $7 per share. So yeah, there's going to be some bailouts, guys. Get ready. Zero interest rates, QE, all of this stuff is real life, which honestly leads me to my next point here, gold. I said a couple months ago, and I completely procrastinated on this and obviously never did it, but I said a couple months ago, I'm looking to buy some physical gold and make a video about it on this channel and unbox it. And again, I never did it, but now might be the time. We had gold fall from 1700 down to about 1470, but the only problem is, and maybe you guys can help me down below in the comments, the only problem is I don't know where to get gold. I tried SD Bullion, they're out. They're out of stock. I tried JM Bullion, that might be the other one, out of stock. Peter Schiff, I know you guys, some of you guys might know who Peter Schiff is. I follow him because I like getting perspectives from many different sides of the spectrum, right? And if you guys don't know Peter Schiff, go check him out. Pretty cool guy. I tried his website, couldn't seem to do it. So let me know in the comments, guys, where can I buy gold? But either way, I'm looking to buy it. I'm looking to buy it here as, again, the Fed cut rates to zero. We're seeing a ridiculous amount of money being pushed into the system. So to kind of hedge against the dollar here, I'm not one of those guys that think the dollar is going to go bust, kind of like Peter Schiff does, but to just hedge against it, I want to buy some physical gold just to store some money in gold, right? And I think that is a good idea, especially if we do get any type of hyperinflation to the point where we start to see some ridiculous devaluation of the dollar, which could for sure happen here with everything going on with QE4, 5, whatever you want to call it, and all this money being pumped into the system. So gold, yeah, 1,400, 1,500. I'm looking to buy, but again, it depends on these places restocking their gold, and who knows, I might miss the window of opportunity here, guys. You know, if they restock it and gold's back up to 1,700, 1,800, I might not buy. I might have to wait again, but either way, you'll see, and I'll let you know, of course, in these videos what I'm up to and kind of what's going down in terms of gold. So overall, that's it for today's video, guys. Kind of the rundown of what's going on, some thoughts going through my head, and the top 10 stocks that I'm watching as of right now, and a little bit of info there on gold. Now, I would love to know in the comments, what are your thoughts? Are you buying gold? Are you buying stocks? Are you hoarding cash? Let me know in those comments down below. And of course, if you guys enjoyed the video, hit that like button for me, and also consider subscribing to the channel if you want to see further content like this. And down below in the description box, you can get 2 free stocks from Webull valued up to $1,400 with a simple deposit of $100. So go get your free money during this crazy time. Stack up that cash, guys. That's one thing that we can definitely do to kind of protect ourselves, is to have dry powder and to have it stacked up and ready to go for any situation, whether it's an emergency for you and your family, whether it's to buy stocks, whether it's to buy gold, whatever. Having that cash is king. So I'll catch you all in the next video. Thanks again for watching. As always, peace out.